Hi, I'm your host, Uncle Dan, and this monthly review of the tanker stocks. Are we reaching a bottom and ready to rocket up from here? We just might be. Let's look at the historical charts, the options, and then the oil tanker matrix to look for clues. Let's go. Okay, let's look real quick at the long-term charts and see what's happening with the implied versus historical volatility and whether we're seeing a bottom in the chart. So this is Ardmore. You can see the purple line, historical vol, is way above the implied vol. So the options are getting cheap. DHT, all of them have bottomed out at the beginning of November. We're starting to move back up, but the options are getting cheap because people are not convinced. Euronav, historical is not that off from the implied. See, we've found a base and are just moving up a little bit. Frontline, same thing, a bit of a wider spread between the implied and the historical. Means that there's not a lot of confidence in the stock moving higher, and if we can find cheap calls, then we'll get rid of our shares and just buy the calls. NAT, look at this, opposite of all the other ones. The implied vols are higher than the historical vols on NAT. Now, I don't know if that's because this is the only oil tanker stock that Robinhood investors can buy, but it's interesting how the options are still considered relatively expensive compared to where the stocks moved. Scorpio, like the other stocks, the options are cheap relative to the movement in the stock. And this one here again, Teekay tankers, the historical is actually a little bit higher than the implied. So these options are considered a little bit cheaper than the actual move in the stock. So there we go. That's a historical price action and the implied vols, which are looking a little cheap in there. So we'll start thinking about strategies we might want to do to improve our return because currently we're just holding shares. We're starting to see some interesting activity in the call options on a few of the shipping stocks. Here's DHT, stocks up 5.5% on the day. We're seeing 1,200 calls versus 200 puts. Not a big number for them, but some bidding on some calls. So there's a bit of nibbling in there. Bought 5 calls and 6 calls for December 18th. 100 contracts at 54 cents and 4 cents. Those are both long bets. Euronav, also quiet, buying 8 puts in January. Someone's selling 9 calls in January. And that's with the stock up again 5% like DHT. Then we had Frontline, some interesting trades. Someone buying 7 calls, 170 contracts at the offer, so that's a buyer. There was a trade done at 10:44 a.m. It looks like they're doing a calendar spread. 30 minutes later, they did the same trade again. May to December calendar spread. Now, normally when you do that, you take the trade off, not in May, but in December. So they're looking for kind of max profit would be at 8. That's a bullish calendar spread where the max profit is at 8 with the stock at 660. So that's Frontline. NAT, now we're seeing some a little more activity in NAT. Someone bought 1,000 of the 3.5 calls in December. Wow, that's a big number. 3.5 calls in December for 10 cents. The open interest in there, 5,600 contracts. So on Monday, we want to take a look and see whether that open interest drops. So the open interest on Monday did go up, so that's bullish. These guys are getting long the stock. And they bought those at 10 cents, and they're already up 50% on those, with the stock up 7.5%, 347. So it would appear 4 calls in December, 540 contracts at 2 cents. These are some big numbers. We'll want to watch the open interest and see, do the numbers go up on the 3.5s and the 4s? You can see the volume in there, 2,800 contracts. Then we have Scorpio, 10,000. That's a good number for Scorpio. Stock was up 10%. Big move today. What did we see in here? Someone hit the bid on some puts. That's bullish. Kind of hard to tell on the 13 puts in December. This was done at 3:27 p.m. So let's take a quick look at that. Looks like the December 13 puts. Let's see where those finished. 95 bid offered $1.05. Kind of hard to tell. Traded 110. Let's look at the price what we traded at here. Traded 110 on the December puts. All right, so that's going to suggest that that was a bearish bet. That's what that would suggest. So they did them at the same time. So this is another calendar spread. This is a 13 put calendar spread. This is a bullish trade again, where they'll make max profit at 13. You see where the timing is on those two trades? So we have another calendar, and they bought the 13 puts for 71% and sold the December puts for 81%. So they bought the low IV, sold the expensive IV. They'll get the benefit of a little bit of faster theta decay, and they'll make max profit at 13. First glance, it looked like a bearish bet, but it is in fact a calendar spread with an upward skew at 13 strike. So that is actually a bullish trade. So another bullish trade in Scorpio and then Teekay tankers. Someone's hitting the bid on the puts. So again, there's another bullish trade. The stock's up 6.8%. So we're starting to see a little bit of activity in the options. People are doing put calendar spreads with an upward skew, looking for the stock to drift up by the middle of December. It's kind of interesting. I might have to put one of those on. So that's what we're seeing in the options today. Okay, now the tanker matrix. What is happening to these guys? As you can see, the rates moving around a little bit. Nothing significant happening in there. The VLCC rates seem to be a little bit firmer, which means we'll probably see more activity in terms of strength with DHT and Euronav and Frontline. But when we look here for the last 3 months, there's still, DHT is popping up a bit for the last 3 months, still down from a year ago. Frontline also up a little bit. But what we're seeing here is that in the last 3 months, we're really seeing Scorpio bouncing back from its lower levels 3 months ago, but from a year ago, it's still the worst performer. So it looks like a little nibbling in the tanker stocks. I think we're starting to get some speculation that we're putting in a low in here. That's what it looks like to me. When I look down here around the borrowing rates, I just checked those. They're all normal except for NAT, still hanging around 4%. It's not 48% like it was when the stock was trading at $9, but it's still higher than the rest of them. And Frontline, there's a little bit of a premium in there if you want to borrow their shares. It doesn't mean that there's a lack of shares. Equally, NAT seems to have enough shares available. I'm not sure what's driving the higher rates, but with the higher rates, NAT does have shares available. It's very tempting, even at 4%, if you're a long-term holder of NAT, it's very tempting to hold the shares, because even if you loan them out, the broker takes half the interest, so you get 2% instead of 4%. Then the broker does all the work around borrowing. You could do that with interactive brokers. Collect an extra 2% a year on top of the dividend. Every little bit helps if you're going to get stuck in here for a while. When you look at the implied volatilities, they've all come down. They all look a little cheap to me. And when we looked at those charts just now with the implied vols being below the historical vols, we might find some cheap call options in here. So it's something for us to think about. When I go back over what happened with Frontline, we can see that Frontline's earnings, they came out at 29 cents. They made a profit. They actually did better than Euronav on a per share basis, but there's no dividend being paid. Whereas with Euronav, they're still paying something of a dividend. So that may explain why you're not seeing the kind of returns that you were hoping to see in Frontline. It's only up 2% for the last 3 months, and it's down 41% from a year ago, versus Euronav, which is only down 29% from a year ago, and DHT is 26% lower from a year ago. So when we talk about which companies are doing well in this down market, when we look across the earnings here, we can see you really have Euronav, DHT, and Frontline. The rest of them are losing money. So you should think about sticking with the companies that can make money in a down cycle as a safe bet for when we turn around later. Now, NAT, because they're the only tanker stock available on retail platforms, they tend to be more volatile, which might explain why the implied volatilities are trading higher than the historical vols, simply because retail investors go there when they want to make an emotional investment. That may be keeping the implied vols higher in that stock. As you can see, there's over 35,000 retail investors from Robinhood in that stock, which is more than the rest of them combined. So that's your retail stock. Now let's look how Frontline did for their earnings and how does it compare to the other stocks. So Frontline came in with fairly high rates in here. So this worked out really well in terms of they were able to book and secure pretty good rates. In fact, they did better than DHT on their rates. But you can see people are asking me, why isn't Frontline doing better? Well, because Frontline also has Suezmax and Aframax, and those are struggling relative to the VLCCs. The DHT is in the sweet spot, and Frontline is spread out, so they're not going to perform as well. Now let's look and see how they did for their guidance. So again, the question was raised, why Frontline is weaker. Look at their guidance. They got 70% of their freight rates booked already at 22K, and look at DHT, 79% at 38K. That's golden right there. So that would explain why an investor would pick DHT over Frontline. Those other vessels that Frontline has, those are obviously significantly lower rates than the VLCC rates. So that will explain a little bit to you. There's a lot of information here. Take it all in. If this is helpful, you leave a comment down below, and be sure to like the video to let me know whether or not you guys would like me to keep doing these. So that's what's happened with the oil tanker rates. There's a lot in there. We're seeing some nibbling. So I think we may be getting closer to a bottom and an opportunity for us to start making some money in there again. So good luck. That's it. We're sailing off from here. Leave questions, comments, feedback down below. Think about subscribing if you want to be a part of our journey on learning how to invest in the market. Thanks.